Greg, you ready?
I am ready.
Okay, good evening, everybody. Hope everybody's not having a soggy night as we are here in Pittsburgh. Anyways, tonight we've got the good fortune of having Greg on with us tonight. I was on his chat session last night, and he's got a trading technique that he has developed himself, and this is why it's good to have traders like Greg show us what he's done, because this isn't some theoretical process. This is techniques that he's developed and traded successfully. So with that, Greg, welcome to the Candlestick Forum. We're anxious to see what you have.
All righty, great. Thanks, Stephen. Nice to be here. Welcome, everybody. Nice of you all to join me this evening. What we're going to be talking about tonight is the one indicator every trader should use, and I'm going to show you a complete trading setup based around this indicator. So I'm going to walk you through step by step. Hi, Dave. What I hope to gather in these sessions is not to waste anybody's time, so I'm going to get right in there and show you the techniques and show you the setups. I think that's what everybody wants. So just to be clear, everyone can see the slide. It's coming through clearly, and you can hear my voice. Okay, great. So the one indicator every trader should use, a complete trading setup. Before we get started, just a quick little disclaimer, as is required in the industry. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, financial resources. You may lose all or more of your initial investment, especially if you're trading a leveraged product such as the futures or commodities. These are highly leveraged products, so it's important that you understand the risks that you're taking. And I always like to repeat the disclaimer so that it appears on all of our videos, etc. I'm sure it's nothing that you haven't seen before. A quick little blurb about me, and what is my last name? My last name is Wwitzman. The W stands for Wwitzman. You can see it at the top. I've been trading since 1992. I started off as a young man. I started my career when I was in my 20s, and I've been doing that ever since. In 2003, I became a trading educator. So about 10, 11 years after I began my own trading career, I started educating traders. At the time, there weren't a lot of educators around, and there was a real hole in the market. People were calling themselves traders, but they were really just, taking educated guesses. So when you have a system, when you have a mechanism, something that works, it's a little frustrating when you see people guessing all the time. So I became a trading educator in 2003. So now I'm in my 12th year of doing that. And sometime around 2006, I was asked to be a CME, the Chicago Mercantile Group education partner. And I've been doing some education stuff for them over the years as well. Some of you may have been to some of my other webinars. Perhaps you've heard me speak before. Today's topic is going to be the ADX indicator, and I'm going to show you a complete trading setup based on this one indicator. And you'll realize as I go through some of the things that I like to do, and some of my kind of rules of thumb, I call them, the way I look at the market, the way I approach things. One of the most important things that you'll see in this next presentation is I like simplicity. I think that if systems, approaches, techniques, whatever you want to call them, are complex, they may look good on a chart, they may back test well, but there's very little chance of you being able to use them successfully in a real-time environment. And that's what trading is all about, is being able to take action, to execute in the face of moving markets, fear, concern, greed, etc. So if you're going to increase the complexity of a system, I believe that you're going to increase your chances of failure. So I'm a big believer in simple. Simple works best. You're going to see my charts are clean, they're uncluttered, they're easy to read. And also, very importantly, I'm a big believer in not using special indicators, not using proprietary stuff. I know there's a lot of stuff out there. There's just thousands and thousands of indicators, and a lot of people are rebuilding indicators. I believe there's so much great stuff that's already been developed that we just need to know how to use it properly. So I don't like to reinvent the wheel. I like to use the stuff that's commonly available. And I think back to my earlier days, I'm sure a lot of you are in the same situation. You think about the reasons why you became a trader, and ultimately it was to have a certain sense of freedom, the ability to earn your living on your own terms, and not be tied down to somebody else's black box concealed indicator where you didn't really know what was going on inside, and if they disappeared one day, well, what then would happen to your ability to earn money and your trading career? So I'm a big believer in, as I pointed over here, very important, there are no special indicators and no special software required. 99% of all charting platforms can be used to trade the setup that I'm going to show you, including an absolutely free charting platform that I'll show you how to use that one as well. All right. So if you like what you see, you can do it on basically any charts out there. I've yet to come across a platform that didn't allow for this setup. One of the questions I always get when I do one of these presentations is, Greg, why would you simply give away this incredible trading information? Right? This is great stuff. Why would you just share it with the general public? You know, years of trial and error, practice, teaching, educating, learning. And my belief is that trading is a journey. It's a journey that I undertook many years ago, and it's not an event. I believe that if I show you something here today, it may hopefully be something that's actionable that you can use in your own trading tomorrow, but it's not necessarily going to change your trading forever. I believe that it's a learning process, and I hope that when you get to know me and you see some of the stuff that we do, that perhaps you'll come back and decide to learn more about our educational products and take that journey with us. So what's an indicator, right? So this is some very basic stuff, and most of you already know. I always start with the basics. We never know when somebody comes to us with regard to trading how much knowledge they have. So essentially an indicator is a mathematical tool. All it's doing is taking the information from the market, which is basically three pieces of information, the price, the time, and the volume, and it's putting it through a calculation. And it takes this mathematical calculation, and then it spits it back out onto the chart into these, graphical representations. So basically all these indicators do is allow us to measure the most recent price movement in order to better predict future price movement. And that's essentially what we're doing as traders. We're saying if something worked well historically, then there's a great probability that it'll repeat itself moving forward. And that's what these indicators do. So we have to also be very aware and conscious of the fact that, indicators are not holy grails. They are tools that help us dissect the market. We are analyzing what's going on, and that's why we call it technical analysis, right? So they are by no means holy grails that never fail. We have to understand that before we get into this type of trading that relies on indicators. So the indicator I'm going to talk to you today is some of you may have encountered it before. Some of you may use it currently. Some of you perhaps have never heard about it. It's called the ADX, also known as the DM indicator. The ADX stands for average directional movement. DM stands for directional movement, or DMI. And it was originally invented by Wells Wilder, who is a very well-known figure in the trading sphere. What I like most about this particular indicator is, or indicators, because it's actually a couple of them, is that when configured properly and set up properly, you can actually use it on its own as an entire trading system, because it has unique characteristics that allow you to see trend changes, entries, and even trade management. So there's a lot of different indicators out there, and a lot of them work really well in certain situations and then fail miserably in others. I'm sure you've seen that. Some work really well when others fail, right? And what a lot of traders tend to do is they say, well, if it fails in this circumstance, I'm going to put on a different type of indicator to compensate for it. And then, oh, well, this one fails when this happens, so I'm going to use yet another indicator to compensate for that. Eventually, they overclutter their charts, and you have too many indicators giving you too much information. You can't really make sense. You can't really read what's going on your chart. It's just over cluttered. There's too much for you to make an informed decision. And of course, the more indicators you have, the more likely you are to have conflicting information, one indicator from the other. So we want to avoid that, of course. So let's get into the guts of it. The ADX system has essentially three components. Component number one is what they call the actual ADX, which stands for Average Directional Index. And the name is a little bit misleading because actually what the ADX component does is measures strength and not direction. So the name says the Average Directional Index, but in reality, it has nothing to do with direction. It measures only strength, whether the market is moving or not moving, right? Whether the market is sitting quiet, accelerating, decelerating. This really just measures the strength of a trend. And we'll show you that on some charts in just a minute. The other components are the DI plus, which, as the color in the name suggests, represents the bulls or the buyers, and it measures uniquely the strength of the uptrend. Then there's the DI minus, which represents the bears or the sellers, which uniquely measures the strength of the downtrend. So one of the nice characteristics of this indicator is actually the fact, right off the bat, you can see the fact that it actually segments these three separate elements. So a lot of momentum indicators that you can use off the shelf that tend to just measure strength and direction combined. So the nice thing about this package of indicators, these three, is that it actually separates it for you for better analysis. One of the things that I think is also critically important is how you set up your indicators. And I know that traders, if you've been doing this for a while, take great pride in how they set up their charts, making them clean, and we tend to adjust them and change the colors and make them look just right. And sometimes, I know for myself, I've been at this business for almost 25 years now. I can spend an awful lot of time getting my charts to look just right. And I laugh about it sometimes, but the reality is there's a reason why we do that. And the reason is simple. The reason is that if something is visually appealing to you, then you'll be able to read the patterns more clearly. And if you can read the patterns more clearly, you'll have greater trust in those patterns, and you'll be able to act on them. So there is a little bit of effort that goes into setting things up properly so that as I say, that it resonates with you, right? So the chart speaks to you, so that when you look at your chart, you can instantaneously see what it's trying to tell you and not have to go and hunt and search for patterns and situations. As I explain, often over the years with the people I've trained, is when I walk into my office and I'm still standing way at the door, my screens are at the other end of the office, I should be able to recognize my pattern and see what's happening on the screen from way at the other side of the room. I shouldn't have to go up close with a magnifying glass to see what's going on. So how you set up the indicator is kind of important, and I'm going to walk you through that. So this is an example of a conventional ADX or DX with the DM, directional movement with the DMI plus, DMI minus indicators. And this is what it looks like out of the box. And one of the reasons why I didn't use this indicator many years ago and only really got into it a few years into my trading was I found this very confusing. I believe that once you get to measuring three elements, it becomes exponentially more difficult. So I like to keep things really simple. I explained that at the beginning. I like to have clean, crisp charts and it very, very simple to look at. The patterns aren't clear. We have all the components, right? We have the ADX line, which is the solid black one, measuring pure strength. And we have a representation of the buyers on the green line and the sellers on the red line. But the way it's configured out of the box, I find to be adds complexity. So, I played around with it over the years, and I came up with something that looks and feels much better and really resonates with me, right? So my configuration is something that is clear, clean, accurate, easy to read, easy to interpret. So these are some of the things I've done. The first thing is I've separated the indicator. I've removed the ADX component of it and the DMI plus and minus. And I've set them up on different sub-panels. just for visual recognition. The next thing I've done is I changed the look of the ADX from a line to a bar. People say, well, how does that really make a difference? How is that material? Well, when I look at my charts quickly and everything is represented as a line, I tend to get confused. And there has been some times where I've thought I was measuring the ADX, but I was actually looking at one of these lines. So by just graphically representing them differently, I know what I'm looking at. So very simply, what I've done here is I've changed the ADX from a line to a bar, and I've actually installed the indicator twice, right? I've hidden these lines up above over here, and I'm only showing the ADX. And I'll walk you through how I do that. And you'll see I've done a little something else here. I have these horizontal lines at these levels, and I'll explain to you what those are as well. So, very sneaky stuff. Yeah, sometimes that's what it takes. So as you can see, what I've done is I've added the ADX, right? And really, you can do this on absolutely any charting platform. I've added the ADX. I've added an indicator called horizontal lines, right? And almost every platform has this. And then I've added the second component of it, which is called the directional movement. Some of your charting platforms are going to allow you to, off the bat, install them separately. And in other platforms, you're going to actually have to install it twice and just hide the piece that you don't want to see. So the directional movement index, ADX, horizontal lines, and the DMI plus minus. Okay. This configuration, by the way, is on Sierra charts. I don't know. The platform that I'm showing you here is Sierra charts, but I'm going to show you what it looks like on a couple of other platforms as well. I'm not really sure what this community, what this group tends to use for their charting. So I'll show you a couple of different alternatives. Basically, here all I've done is I've selected the ADX component, and I've changed the draw style to a bar. All right? Simple enough. The next thing I've done, and this is a little bit of an add-on component, is overlaid on top of the ADX component, I've added the following horizontal lines. So the same way you take, let's say, a stochastic, overbought, oversold regions, that's all I've done here as well. All I'm doing is I'm adding 10, 20, and 40, and I'll explain to you what those lines are for. If, for whatever reason, you're looking through your charting platform and you don't see DI plus, DI minus, it may also be under the name directional movement, average directional movement, or DMI. There you go. DMI is what they call it in that. Yeah, it goes under a few different names for whatever reason. They've abbreviated it in different ways. Okay, so once again, I've added these 10, 20, and 40 lines. Here's an example for those of you who are strictly doing not day trading. If you're trading off the daily chart, right? If you're trading off the daily chart, you're not doing intraday trading. You can use, this is freestockcharts.com, and again, you'll see that this is not what it looks like out of the box. I just used the pull-down menu and I changed the look from line to bar for the ADX component, and I've gone ahead and I've installed it twice. One is just the ADX and one is the DI plus, DI minus. And this is what it looks like on NinjaTrader. So same thing, NinjaTrader, people are going to say, well, how come I can't find it on NinjaTrader? It's there. I believe it's called, what's it called? It's called directional movement. Yeah, it's called the DM directional movement. There you go. Thank you. Appreciate that on Ninja. And same thing. I've installed it twice. Right? Same trick. Really neat little handy trick. I installed it twice. I set to transparent the lines I don't want to see, so I can set it up in the two different panels. And there's also a little indicator on NinjaTrader called horizontal lines, or I'm sorry, in NinjaTrader it's called constant lines, and that allows me to overlay those 10, 20, and 40 levels. And those are the levels I'm going to be watching. That's what I'm going to be paying attention to. Okay, so now everyone's clear on what the chart should look like. So let's move forward and look for some patterns, situations, and trades. Right? Again, it's very simple. Just about every platform out there has it. You just want to separate those two bottom panels so you don't have all of the information in one panel. Right? So we've got the ADX as a bar and the DI plus, DI minus below as the squiggly lines. So how do we use it? This is what everybody wants to know. How am I going to use this to place my trades? I'm going to show you in 4 easy steps. One of the things that you'll see, you go to the website, it says these trading systems can be learned and deployed in about an hour. If you have a little bit of knowledge and a little bit of experience, you know how to fiddle with your charts. Again, I go back to what I said at the open. I like simple. I like easy. I'm really going to avoid the complex stuff. So a lot of these systems that I teach can be learned in about an hour, except for market profile, which is probably more complex. But this is going to be 4 easy steps to get you up and running with this trading setup. The first thing we're going to look at, the first thing we're going to draw our eye to is the trend, which is the ADX component, right? The bar component. We're just going to look at the first indicator up over here. And what we want to know is there a measurable trend in the market? Right? And that's trading 101. Everybody knows that. If there is no trend, you're unlikely to find a meaningful trade. So if the market can't explain to you, if the market can't show you unequivocally what the trend is, then there's no step 2. If you cannot tell me what the trend is, then you should not be looking for a trade. Because if there's no trend, then there's no trade. How do we know if there's a trend? Well, those were those lines that I showed you. 10, 20s, and 40s. The ADX is measuring the pure strength. Doesn't care about direction. It's only about strength. When we're down below the 10, like we are over here, the market is asleep. It's not doing anything. It is trendless. There is no trend. There is nothing to be done. And trades taken in that lack of energy are going to be very high risk and low probability. Once the market wakes up and crosses above 10, it's starting to think about a new trend. Once we've reached 20, we are now in a trend. Okay? So below 10, there's nothing you want to do. You don't want to do anything below 10. Walk away from that stock, walk away from that market. There's nothing going on. Above 10, you want to start to set your alerts. Something is happening. The market is waking up. Am I ready to take a trade? No, not yet. The trend is not yet confirmed, but there is some activity that's brewing. Once we get to 20, now all of a sudden, the market is starting to develop a trend. Actually, this chart that you're looking at is a chart of crude oil. I'm very active in the crude oil markets, but it works on any market, on any stock, right? So let's remember those numbers. 0 to 10, there is no trend. Nothing to do. Look for a different market. Look for a different stock to trade. 10 to 20, set your alerts. Something is happening. The market is starting to transition. There's something going on. I need to pay attention. 20 to 40, the market is in the trend, right? Things are actually happening. When we go from 20 to 40, that is the juice. That is the juicy part of the trend. That's where you're going to make your trade. 40 plus, we've run into exhaustion. The market has run its course, and now we are looking for it to exhaust and turn on itself. All right, so those are the important numbers, 10, 20s, and 40s. So that's step 1. We only want to concern ourselves with the trend. Let's go to step 2. Assuming that we have something in the ADX that tells us there's a trend developing or we're in a trend, we now want to go and look at the direction of the market. So directionally speaking, who's in charge? The buyers or the sellers? That's what we want to know. Right? Who is dominant in the market? Because that's obviously going to make a difference to where we place our trade. And let's go and find out how we do that. Oops. Right now, Sandy, what I'm showing you is on intraday charts, but I'm going to show you a daily chart as well. A lot of what I do is on the intraday basis, in and out many times during the day. The concepts are the same. The pattern is the same. The settings are the same. Is the ADX similar to the TRIX? No, it isn't. The TRIX is a triple smooth, detrending moving average. The ADX uses a component of the true range. Okay, but we'll get to that later. So let's find out now who's dominant, who's in charge of the market. It's very, very easy to do, right? Like I said, visually appealing, this stuff should jump out at you. I've got a red line and I've got a green line. Whichever line is on top shows me the dominant participant. So if the red line is on top, the sellers are in charge, and if the green line is on top, then the buyers are in charge. And when they cross, well, that's the transition from buyers to sellers. So sellers are in charge when the red line is on top. Buyers are in charge when the green line is on top, right? Red for sell, green for buy makes a lot of sense. You can start to already see how these patterns line up with the market. You can see how the sellers took control over here and the market sold off. You can see how the buyers gained control over here and the market rallied. Let's dig a little bit deeper. Let's look at combining now the two concepts. The ADX, measure of trend, with the direction. Steve is asking, how do you put the DMI plus and minus on the same graph? I'm not quite sure. A lot of the times, I will tell you, the answer is to load the indicator twice. Right, that's the answer. That's the trick I showed earlier. A lot of times, that's the quick and dirty trick. You load it twice, and you just conceal what you don't want to see. Okay, now let's go back and let's follow along with the chart and see what it looks like. Step one, we're going to look for DI minus is sellers in red, DI plus is buyers in green. That is correct, Tony. Step one, we're going to look for the trend. So over here, what's going on? We're below 10. There's nothing happening. There's nothing happening. Oh, we've poked our heads above 10. The market is starting to wake up. Right now, we drip back below 10. It's gone back to sleep. Now we've crossed above 20. We are now in the trend. The trend has begun because we have breached the 20 level. That tells me I am now looking for an entry. What is the entry I'm going to take? The entry is going to be the next cross of the DI plus DI minus. All right, let me repeat that. Step number one, I wait for the ADX to go above 20. That tells me the market has woken up. Step two, I enter on the cross, whichever direction it's in. Simple enough? Let's follow along. What happens now? We're in the trade, right? Here's the cross. The entry was, and this is a great area, by the way, to use your candlestick knowledge. It's a great compliment because if you want to get a more precise or accurate entry, you can combine this crossing of the DI plus DI minus with your favorite candle pattern. So now we're looking at a long scenario. The trade is long. Moving along with the chart, yeah, we can see that it weakens, right? It drops below 20. A drop below 20 tells us the market has gotten weak again, right? It's fallen out of the trend, but it's not an exit signal. Below 10, you have to worry. If it gets down now to below 10, it means that the market is completely done. You don't want to be in a trade below 10. What are the other things we know about the ADX? Crosses above 40, and what do we know from our levels that we posted earlier? Above 40 is exhaustion. So you can see how the market ran up, we breached the 40 area, and the market is exhausted. Do you want to take a trade up at 40 when the market is exhausted? No. Same as before, right? What do you want to do? You want to wait for the next cross. Here it is. And the reason is, that's it, exactly. Same question, same answer. You wait for the next cross. The entries are on the cross. That's the go button. Why? Why do we wait for the cross? Why not just take it when the ADX goes, above 20 or above 40? Well, the reason is that, as a lot of you know, overbought markets can remain overbought for a long time. And if you've ever used any indicator before, you sometimes see these indicators pegged to the ceiling for days and weeks before the market starts to retreat. Same thing with oversold. They can stay oversold for an awfully long time. So exactly what Jeff said, you need the confirmation. So the confirmation is that cross between the DI plus and the DI minus. The other thing that's important about waiting for the cross is this. This is what I always find very important. For me, trading comes in different, there's different levels of experience and knowledge, and some of it's very systematic and some of it's very mechanical. A lot of traders trade on what I call trading information. So they wait for something to happen, and then they use this information and they plan a trade. What I want to do is not use solely my knowledge. I want to have a clear and defined signal that is easily recognizable, right? So a cross is easily recognizable, easy to interpret, and repeatable, so that I can go back historically on the charts and see how often it worked and how often it failed. Does this work all the time? No, nothing works all the time. I wish, I wish trading were such high accuracy, but it is a very accurate system. So you'll wait for the cross. That's where you're going to get. That's where you add the element of objectivity and a more systematic approach. So it takes the thinking out of it. It removes the human element, removes the interpretation. Okay, let's move on. Exactly, eliminating the emotions. So as a quick review, ADX is below 10, no trend, it's going to stay out. Nothing to do there. ADX is transitioning. Right? ADX is transitioning. Means the market's waking up. ADX has now crossed from 40s back down, and now we're back below 10. We want to get out. So it rode you all the way up and then brought you all the way back down. Now, to get your head around this, remember that when you look at the ADX, somebody said, what's the ADX on the downside? It's the same, because it's only measuring the strength. It's only measuring the strength. The first thing you're looking at is whether or not there's energy in the market. If there's no energy, then I'm not trading it. This can be used on all time frames. I'm showing, this is an intraday chart of crude oil. Now, again, here was that poke above 40, but we waited for the cross. Can it be used to trade options? Yes. So one of the things, if you want to trade options with it, is you set alerts for when we start to cross above 10, right? Then you watch it for a couple of days. And then you see if it crosses 20. And then then it becomes an actionable signal. And then you watch it to see. Absolutely, it can be used with Forex. No problem at all. The time frame for the intraday chart is actually a range chart. And I'll use different charts I'll use different time frame charts based on whether I'm doing a trade on a daily basis or on an intraday basis. Okay, can it be used with Renkos? Yes, absolutely. Intraday. Renko is not something you want to be using for a longer time frame chart. The out-of-the-box setting is 14 periods for the ADX and DMI. Right? Same thing. 14 and 14. That's the out-of-the-box setting. Now, some of the things that you'll maybe want to experiment with if you're an intraday trader, and there's a lot more of this. Again, we don't have that much time to go into the whole trading setup. But in the full course, I'll explain to you that on an intraday basis, there's a lot of benefits to using different types of charts, right? To move away from a time-based chart and towards a range, a Renko, or even a tick chart, because it eliminates a lot of the noise in the market for an intraday on the intraday basis. If you're trading off a day chart, it's less important because the distance between your stops and your targets are going to be much, much wider, so you don't have to rely on that price action element. Absolutely, you can use it on ETFs. 14 periods. Every indicator, Andrew, has a setting for the number of periods. In other words, how many candles it's looking leftwards on the chart. And this is set to 14. So that's the out-of-the-box standard setting. Now, just like any indicator, my belief is that personality comes into play a little bit. What I mean by that is the following. You start off with an indicator with the default settings, right? So like a MACD is 12, 26, 9, right? So you don't change it. The standard settings on the ADX DMI are 14 periods. You just leave it like that. And you watch it for a couple of days. And you may find that it lags a little bit or it's a little bit too sensitive. And then you adjust slightly. One of the things that I like to do is the following. What I do is I use the half rule. So if I set up the ADX in a 14 period and I find that it's lagging slightly, what I'll do is I'll cut it in half. I'll go to 7, right? And then if that's a little too responsive, I'll split the difference. I'll go up to a 9 or a 10 period. And you end up just finessing a little bit of the settings. Most of the time what you'll find is the developer of the indicator has given this a lot of thought, and the default settings work pretty good. Is it necessary to go to a bar chart? No. Roger's saying if you can read the ADX clearly, is it necessary to change the line to a bar? No. I do that for my own personal preference, so that way when I look at it, when I just glance at it, I know which part of the indicator I'm looking at. Bill, if you want to add those horizontal lines on Ninja, the indicator is called constant lines. Constant lines. So that's what you're going to add. And you're going to overlay it on the same panel that you have the ADX on. So step number 3, that was what I showed you over here. So this is a counter trend trade, right? The trend, let me just do the steps 1 through 4 again. Number 1, we look at the ADX and we measure it for strength, 10, 20, or 40. Where are we? Number 2, if we do have a trend, if we do have a recent move above 20, now we're going to look for the cross between the DI plus and the DI minus. Step 3 is we've gone the distance, right? We've already run all the way up to 40. Now we have a choice. We have a choice. Our trade has run up to 40. You can exit the trade because the market has told you that it has run its natural course on this trend, or you can take a counter trend trade, which means ultimately, this chart here is still in a long trend. We haven't made a material new low, right? So there is a short trade to be had, but it's counter trend. It's going against the great. And somebody was asking, well, when I get to exhausted over 40, what do I do? So you have a choice, right? So that's counter trend. If you're currently at above 40 and it came down under 40, can you jump in? Yeah, that would be a counter trend situation.
Back on. We will try to reschedule him for Monday night. Sorry for the technical difficulties, but that's life on the internet. Okay, everybody. We'll call it a night. Sorry about this. We'll be back here same time, same place, Monday night. Hopefully we'll have the problem straightened out by then. All right, thank you for coming. We'll see you in the chat rooms.